Welcome to another episode of Wealth Building Conference, and thank you so much for joining us again for another important episode of our program. So tonight we're going to be looking at another important topic. But before we go in, so before we go in, we just want to appreciate everyone that has been joining us all this while. So on behalf of Wealth Building Conference, we want to thank everyone that has been joining us. Tonight, we have another important guest in our midst, the person of Lemo. Lemo is a professional accountant. Okay, so sorry for that technical issue. I don't know what's going on in my, something. I think I'm kind of echo. So, Mr. Tolu, can you hear me very well?
Yeah, it's perfect now, sir.
Awesome. So once again, I want to thank everyone that has been joining us. Can you hear me?
Yeah, I can hear you.
All right. I think we are good right now. Are we good right now? Can you hear me? Okay. I think we are good. All right. So once again, I want to thank everyone for joining us again for another important episode of Wealth Building Conference. For all our viewers across the world, we want to say thank you so much for joining us every week. Today, we have another important guest in our midst in person of Tolu Lemo. Tolu Lemo is a professional accountant specializing in tax planning, accounting and finance, wealth management, and risk management. He has over a decade of experience, more than 2 decades of experience in accounting and finance. So we're going to be looking at another important topic today. But before we go in, I want Tolu Lemo himself to introduce himself to let us know who is Tolu Lemo. Tolu Lemo, the floor is yours. Please, can you give us a bit of yourself? Uh, when did you start practicing, and why did you actually focus on medical professionals, helping them to build wealth? The floor is yours, Tolu Lemo.
Okay, so basically for me, thank you so much. First of all, thank you so much, Mr. Fashola, for bringing me on this episode. It's another episode which I always, look forward to, and I strongly believe in knowledge sharing, which is the only is the foundation to so many things, and it's very important that we continue to give or to share message, to speak based on experience, to speak based on what we see from time to time. And the end goal is for all of us to build our economy, to build our wealth together, and be able to pass it on, in the
Cool.
long run. Okay. For me, my focus is actually on wealth building. Thankfully, I was able to start my career with RBC as a banking and investment advisor and consultant. Then I moved to TD, where I spent about a year before I moved into my passion, which is the corporate banking space or commercial banking space. And the ultimate is for us to see how we can partner together, how we can build wealth together. And when we build wealth, when we partner and build something, build an organization, build a company that is actually going to stand the test of time, we are building economies.
Hmm.
Apart from individual economies, we are building family economies, we are building national economies. So whatever we can do in our own little capacity as individuals with knowledge, with experience, let's just give it out. Even if it's not going to give us anything, let's keep on speaking.
Wow.
And that's why I've seen medical doctors, with so much passion for their profession, but not so much passion for wealth building. They know so many things about medicine, but on the other side, when we flip things around, they have little knowledge.
Hmm.
And not because I can't blame them, it's because of background, number one. Number two is because of let me say, lack of exposure. It depends on the association they are tagging along with or the association they belong to. So when we are able to expand their horizon, expand their view about investment, about business, about wealth, maybe they can have a shift or change of mind, or let me say a shift in their thoughts or in their thinking towards, well building. They are not, we are actually not meant to work for money all our lives. At some point we won't be able to do anything again. Then the question for us is, can this do we have a system in place
Hmm.
to actually call upon when we retire, or do we have a system in place that we can continue, that can continue to generate enough funds, not necessarily for ourselves.
Hmm.
I've seen things, it's beyond individuals now, not necessarily for ourselves, but
Hmm.
for generation to come, for the economy around us, for our folks, for our tribes, for our, for the nation.
Hmm.
And then I've never seen anyone that delve into this with this mindset that doesn't make it. Like
Amazing.
finding solution to so many problems. And when you do that, you're actually expanding your wealth in one way or the other.
Amazing. That's fantastic, sir, Tolu Lemo. And for all our viewers around the world, wherever you are joining us, please, I want you to please share this link to friends, families, or especially business owner, medical professionals, immigrants that are looking to build wealth. Tolu Lemo is going to be, sharing a lot of experience, strategies on how we can build wealth, not only build wealth and pass it on. I just want to quote what you said now, that it is not, so building wealth is not this time around, is it's not about just I am the only one that want to build wealth. It's a collaboration effort. Again, it's a passion. Like for you, it's something that you derive passion in doing, right? You don't even care whether it is going to give you money or not. All you want to do is just to open their eyes to build wealth. And that will lead me to the first question. Tolu, why do so many medical professionals and high income but still struggle with building lasting wealth? And this is something I come across on a daily basis. I see them, they make so much money, and at the end of the day, they have nothing to show for it. Sometimes they ask, Fashola, I make so much money, but I don't know where this money is going to. Why is this happening to so many medical professionals, business owners, immigrants across the world? Please.
Thank you so much. Not only as a personal finance person, um, not basically medical professionals are actually having this same challenge. I think it's a challenge that is actually being faced by human race. I will say it that way. You know why? Psychologically, as human beings, whenever we have resources in our possession, the first thing that comes to our mind is how to spend it.
Hmm.
Yeah, that's the honest truth. Even the Bible even says it. It takes power to tie down money. In the book of Proverbs,
I
it
am.
yeah, it
Hmm.
takes power to retain money, to tie down money. So so many things can actually go into it. The first thing I'm going to say is many of us don't have what is called exit strategy.
Hmm.
Whether you're starting a new business or you're starting a new career, you should have an exit strategy in place. So when we now bring it home to look at, okay, you started your career at the age of 25, yeah, which is for many people that actually started well, or
Hmm.
20 or 22. Then for immigrants, it's a different ball game, especially
Um,
people that just landed at the age of 40. That means they are just starting their career at the age of
for sure.
40.
For sure.
So you can't compare yourself with those that started at 2025. That's one thing let me just quickly touch, on that. However, if you came into this country and you came, or maybe you started, you must have an exit strategy. As a business owner or business advisor, I always tell people, well, you must have you must have an exit strategy.
Hmm.
It could be that business might go wrong at some point. It could be anything can happen that may shut it down. So
Hmm.
how do you navigate through that particular process or through that particular instance? So bringing it home for medical professionals, for immigrants, for workers generally all over the world, the challenge that many people face, even with the high money they are making or high income they are earning every year, is the fact that they don't have that plan in place, financial planning. Financial planning is the ultimate. Let me just
Can
quickly
you
give you
please
an
break it down?
instance.
So you've talked
Yeah.
about the exit strategies. You are talking about the financial plan because don't
Yeah.
forget that you are talking to professionals. You are talking to people that doesn't really have knowledge in accounting, finance, tax planning. So please, we want you to calm down to the basic right now. People really want to
Okay.
learn, understand what you are saying. So please state it in a plain language.
Fantastic. Thank you so much, Mr. Fashola, for that. When I talk about exit strategy, when you start your career, you are going to retire one day.
Hmm.
Do you
That's
have an exit strategy to take care of yourself going forward after you are 65, after you've retired? You're a medical professional today. By the time you are 60, I don't think or 65, I'm not sure you have the same strength to be going into the theater to operate for 18 hours or 16 hours again.
hmm.
Do you have an exit strategy or financial planning, in financial plan in place? So when we talk about financial planning, it starts from the first day that you start earning,
Hmm.
and it involves so many things. The first thing, or let me say the foundation for financial planning, is your personal budgeting.
Hmm.
How much you are earning, then how much. In fact, I don't even start from how much you earn. I start from how much are your basic expenses.
Hmm.
Okay. So when you table that down, and thankfully, we have so many tools that we can use. Mr. Fashola, you know this. We have so many tools that we can be used to actually,
So many.
to simulate what you will need for retirement. It's so simple. It's just for you to say, how much do I need for retirement? That's the first thing.
Hmm.
Then, okay, if I need, let me just break it down so that people can understand and try to figure out where they want to be. Okay, you need $2 million, or how much income do you want to be earning at retirement? Okay, I want to be earning $100,000 at retirement. The question is, how much investments can give you $100,000 in return
Hmm.
in retirement. So
Hmm.
that means if I simulate it at 5% return or ROI or rate of return every year, so you're looking at almost like $2 million, right?
Cool. Cool.
Yeah. So that
Cool.
means you must have minimum of $2 million in
Yes.
retirement fund,
Hmm.
or you have $2 million in assets that
Cool.
will generate minimum of 5% for you every year. So the question now is, if I now, discount it backward, okay, then you now begin to look at how much do you need to be saving every month
Hmm.
to be able to earn 2 million, I mean, to be able to generate 2 million in assets at the end of your retirement. Are you
Amazing.
seeing that now? So
Amazing.
when you are not doing that, when you do that, then it will give you, as at today, what you must be contributing every month for you to be able to meet up with $2 million.
Amazing.
Okay. So now, when you have that particular amount that is meant to be saved every month, and that is not only saving, I'm still going to get there, because sometimes people can just be saving and they are not investing. You are not doing anything. So when you have that particular amount, that the system will show you how much you have to be saving every month, then that will determine what your expenses will look like.
Amazing.
So when you now see what your expenses will have, I mean, when you see how much you're meant to save,
Hmm.
then that determines how much you are meant to spend. So then you can then figure it out. Okay, am I earning enough income to meet up with the savings?
Hmm.
Even if I'm earning enough income, then the question is, do I have expenses that are actually much more than my income that is not allowing me to save enough? Then you can begin to adjust. So a few things. Number one, people they lack financial planning, they lack financial understanding and wisdom.
Hmm.
The
Hmm.
third one is lifestyle. I've seen lifestyle and debt. Lifestyle and debt are two, issues or factors that are affecting so many people today.
Hmm.
Lifestyle, in the sense that I want to do what I cannot afford. That's my definition of lifestyle.
Wow.
Doing what you can fund your life. The lifestyle is different. Yeah, so some people, you can decide to stay cool. That's a lifestyle. You can decide to be spending money 3 times. You are traveling everywhere. You are buying a car that you don't even have. You are paying $1,000, $2,000 every month to into debt to pay back. You go get a home that is $2 million when your income is just about $200,000 a year.
Hmm.
You kill yourself through debt.
Oh
And
my.
when you do that, there's no way you can meet up with the retirement. That's why you see so many people, you see so many footballers.
Hmm.
Then after retirement, you begin to wonder, wait, what happened to all the money? Where did the money go? The money must have gone to expenses for sure.
Wow. Wow.
Okay, so those are the things. Intentional strategy on budgeting, tax planning. Tax planning is another thing, because you can
Hmm.
be getting free income,
Hmm.
by putting your money in RSP, getting to the limit of the RSP given to you every year. Then you have some tax savings. Those tax savings that you're having, you are investing those tax savings. But ultimately, what kills people, what I've seen, even if they are making millions of dollars, is it's lifestyle.
Amazing.
It's lifestyle, you
Thank
know.
you. Wow, that's mind blowing, Tolu. Thank you so much for that. For those of us who are just joining us, if you have any question, please you can drop it on the comment chat. We are going to be looking at so many strategies today. We're going to be talking about so many things that bothers about retirement planning, tax planning, exit strategy. So just few things that Tolu just touched right now. Start from savings. If you want to start, if you want to, one of the things that really affect people when they retire is number one, savings. You talk about budgeting, you talk about tax planning, you talk about lifestyle creeps. Many of us, upgrade our lifestyles when we are spending the money we don't have, right? Try to impress people who doesn't really care about your life. So we just have to be very careful about that. Thank you so much, Tolu, for that. So the next question I want to ask you, Tolu, is this, right? So how can medical professionals, healthcare professionals, immigrants, Canadians, right? or let me talk about people around the world, protect themselves from financial burnout. I've seen that in so many cases. I work with business owners, I deal with medical professionals, I deal with a lot of immigrants. And one thing that really baffles me most is they actually, some of them are actually burnout, right? So, what are the reasons why? How can doctors and healthcare professionals, immigrants, right, protect themselves from financial burnout?
Okay, Mr. Fashola, I want you to expatiate on that financial burnout so that I don't
Well,
shoot
yeah. So burnout,
the
like
other way.
let's look at just simply just look at the burnout, right? Somebody, let's say, stress out, like financial.
Okay, financial stress.
Yeah,
Okay, financial stress. Okay,
exactly.
okay.
So
Thank you so much.
how can they prevent themselves from those things? How can they protect themselves from those things, right?
Okay, that is actually amazing. It takes wisdom to make money. It takes wisdom to build it.
Hmm.
It also takes wisdom to actually retain it. I've said three things: wisdom to make, wisdom to build, wisdom to retain. The first thing I'm still going to go back. The first thing I'm going to mention is um, strategically. If I looking into the holy book, which is the Bible itself, when we look at what happened to Joseph, how Joseph was able to build wealth for Egypt, he looked at the concept of 20%, right?
Hmm.
Okay. So automatic saving, if you can, if you depending, let me just put it. This is a caveat. Depending on the level, excuse me, at which you are, if you are 40, 50, and your retirement is 65, so that means your savings can be 20%, right?
Hmm.
So the bottom line is as much as you can save, automatic saving goes a long way. You know why I say so? The
Why?
reason is when it's deducted, because we call it PAP, right? uh, pre-automatic payment or pre-automatic deduction, PAD. Some people call it PAD. If you do that, you classify that particular savings as your expense every month.
Hmm.
So before money comes into your account, it's been deducted already. For example, you've set up an investment with Mr. Fashola now, which has a PAD on it, pre-authorized debit on it. Every month, as at a particular date, as money is landing in your account, is being deducted before you even see it, before
Hmm.
you even touch it.
Hmm.
So
Hmm.
that one will actually keep you in shape so that you don't have any excess cash, or let me say discretionary cash, that you can just put your hand into. That's the first thing. The second thing is diversification. Okay, the for diversification, you actually into medicine. You go every day. You, if anything happens at some point to you, probably an accident, God forbid, anything happens and you're not able to work at that period, do you have insurance in place to cover you for that particular period of time? Okay. Do you have disability insurance? Do you have accident insurance? Okay. Do you have all that? If you don't, you're screwed in one way or the other. Okay. That's the second thing. The third one is, if you have investments in place, like businesses that are running like a mechanism on their own, even if anything happens, you are not able to do what that's been giving you money or regular income, but you know that your passive income is coming from somewhere, you continue to sustain your life, right?
Cool.
That's another thing that can actually prevent if financial stress. And the last thing I'm still also going to mention is leveraging insurance. Insurance is very key in this part of the world.
Wow.
It's very, very important. So it's a measure to actually manage your personal and your family risk or financial risk altogether, so that nothing happens to you at some point, or if anything happens to you at some point, you keep going. You
Hmm.
keep going. So Those are the few things I will say can actually prevent you from having some, financial stress. Okay, you don't spend what you don't have, you don't get yourself into too much debt. You have automatic saving. You take care of yourself. Your savings is what you pay to yourself first.
Mm.
Your investment, let me combine it together. Your investment and savings is what you pay yourself first. So
Mm.
you should be looking at paying yourself minimum of 20% from your income every month. Minimum, like I said, depending on your age. If you are like 60, or I mean, if you are like 55, looking at retirement, you may want to increase that one to almost like 35, 40. In fact, what some people do, let me just chronicle. When we're training as financial planner and there was financial advisor at some point, we look at, stages of life.
Oh.
Okay, from 0 to 20, to when you're in school, that you had no responsibility. When you get out of school, you marry, fine, you give birth. That's a life stage. Some people, because they have a long career, by the time they are like four, that's why I said people that came into Canada like immigrants at the age of 40, they are just buying their homes at 40.
Mm.
That means they have a long way to go. So
Mm.
when you look at that, so for us as financial advisor, let me say technically, we expect that at the age of 45, you have almost paid out your mortgage.
Mm.
Yeah.
Oh.
Then by the time you are 50, the children are gone. So
Mm.
between 50 and 65, you don't really have so much expenses anymore.
Wow.
Then you focus on retirement savings. So that means from 20%, you can actually up it to like 55 because your personal expenses are very small. They are very low at that point in time. So to prevent that, have a plan in place, have a budget in place. Whatever you cannot chew, don't buy it.
Hmm.
All right?
Whatever you cannot shoot, don't buy. Wow.
Don't buy it.
That's very deep. Whatever you cannot shoot, don't buy it, so that it will not cause problem for you, right? So please, we want to please state here that we are not offering financial tax advice. We are offering educational advice. So if you want to implement any of these strategies, consult your tax advisor, your financial advisor, or your insurance broker to make sure that they advise you on the best strategies to use to plan for retirement. We are only sharing this for educational purposes only. Just a disclaimer in for those of us who are watching us live right now. So Tolu, I just want to thank you so much for that amazing. So just to summarize, like for you to prevent financial burn, number one, you must have savings, you must diversify your investment portfolio, you must have insurance in place. Insurance is going to give you money you don't work for, right? Have critical illness in place, have life insurance in place, have disability insurance in place in case things life turn unexpected, like life take unexpected dive. So want you to please ensure that. So the next question I want to ask you, Tolu, is this also: how does debt, especially immigrants that are really into high debt, like they have so much debt, how does debt, right, impact wealth creations, like among immigrants, medical professionals, business owners? Because I've seen this a lot, right? A lot of
Mhm.
businesses today, a lot of people have been like struggling with debt, right? In this part of the world, debt is one of the number one killers of wealth. How does debt affect immigrants? I'm not talking about good debt, I'm talking about bad debt, right? How does this affect business owners
Okay.
in this part of the world?
Mr. Fashola, thank you for clarifying that because I was almost jumping into it. Bad debt and good debt.
Yeah,
Bad debt and good debt. Yeah. Good debt is fantastic
amazing.
because I've seen it work in the corporate space, in the business space.
Can
I've
you
I've
please give us
seen
an
it.
example of good debt, an example of bad debt, so that people
Oh,
will
okay.
know if you are talking about debt, right? What actually constitute bad debt? What constitute good debt? And give us
Okay.
an example of that. How can bad debt impact our lifestyles, our retirement planning, our, whatever.
Fantastic. Okay, so let me start from the good notes, which is the good debt.
All right.
Okay, a good debt is the one you acquire to finance a business asset. Okay, a good debt is the one you acquire or to finance a business asset. And what is a business asset? Or let me just blow it open. To finance an income generating asset.
Amazing.
Okay. So you can go to sleep and that same asset continues to service itself. For example, if Mr. Fashola decides to buy a multi-family home now, goes to the bank, say, banks are generous actually. They will give you money. I have this asset I want to acquire for $1 million. I have $250,000. The only thing I need to finance, I need financing from you for $750,000. Bank will give you $750,000. So far, they've seen the cash flow of that asset. So Mr. Fashola can go to sleep. What Mr. Fashola has contributed is just it's just 25%, which is 250,000, right? Then the asset is there, doing his own thing. You are sleeping at home, the asset is making its money. So that's good debt. Why? Because that same debt, you are using it to generate more income. Okay. And that's a good thing about debt for wealth. We are back to wealth creation again. That's debt acquired for wealth creation, which is income producing asset, business, whatever. But for bad debts, okay, accounting wise, let me say layman wise, let's say bad debts, because there's a different definition for a bad debt in accounting. But for a layman's sake right now, let's look at what constitutes or what's the definition of it. So a bad debt is you go to the bank, a perfect example, get $20,000 line of credit, off you go to Spain, to Barcelona. You decide you and your family to cover about 3 countries in Europe. 20,000, 1 week after you are back, 20,000 is gone. You have debts that you have to pay. Spain, they've made the money. Unfortunately, they don't give dividend. Maybe probably would have gotten one. Wow. So that's bad debt. So the money is gone. You still have debts you have incurred. How do you recover it? So 20,000 is off your lifetime, is off your retirement savings plan for sure, because you have to pay back that money. So that same money is an opportunity cost. That's the money that you could have, put in your investments or even put in your mortgage to pay down your mortgage. You have used that same money to actually, spend in Spain. I'm not saying that is not good. You need to combine your lifestyle. You need to take care of yourself, right? You need to take care of yourself, which is good. But when you don't have the means, or when you have not gotten to that level, you don't need to do it. You don't have to do it. If you can decide to go to Banff and spend 2 days and just spend like about $3,000 and you are back home. I mean, you are fine. You've gone on holidays. You are good. Okay. It's probably going to be the same experience, but that same 20,000 cost for the trip, you can project it based on your income, and you can save or hard work, additional work towards it for you to have that same experience, which is good. But debt as it is not bad on its own, but it is bad when you don't have the capacity to actually take care of it. Like I mentioned, when at this point in time, you are earning combined family income is about $150,000 or $100,000, and all of a sudden you are taking 20,000. That's 20% of your lifetime for that year, and you put it in Spain. Okay, so that's not wisdom. That's not wisdom. Okay, that's almost like, so if you have the means, if somebody is earning like 500, 400K now, 300K, and decides to do that, that's fantastic. So let's not take it. That goes directly into your financial, let me say your finance, $20,000, for example, that we mentioned. They have incurred debt. What I've seen people do, as a financial advisor, I saw a guy at some point, and I was shaking my head in my mind because I can't show I can't show that kind of expression when it was in front of me. I saw huge debt, a new vehicle, almost like a $1 million home, a truck of almost like $100,000.
Wow.
Yeah. And the guy was just, from, every paycheck to paycheck. And I looked at it. Fantastic. Banks here, banks are so generous, right? They will give you whatever you want. As I'm talking to you right now, when I came to this land, it was work to get $2,000 credit card.
Hmm.
But now I know offers that I get almost every month to come and take debt. And there's no, when I needed it, you didn't give me, so I don't need it again. So that's the way. It's so nice because where we all came from, especially new immigrants, because we haven't seen this kind of life before, this kind of lifestyle, to be honest. And sometimes it takes, knowledge, it takes wisdom and understanding sometimes to manage life, to manage things like that, because everything will be jumping at you. Banks will qualify you based on your income for a property. They will not qualify you based on your net income. They will qualify you based on your gross income and the debts that you have at this point. So, for example, if you go to a bank now, they can qualify you for $1 million house. And that's it. If you buy it, you have entered it. Houses are not bottles. They are not shoes that you can resell on Amazon or on Facebook. They are not something that you can resell on Facebook. So many people, I always love to speak to this from time to time. They don't have an understanding. So they first go into debt. They buy a new car, brand new car, a 70,000 car, fantastic. They didn't pay down any amount.
Wow.
Zero pay down. And they start paying like $600, $700 when your individual income is just about $4,000 a month. And you're paying almost $700. You're going to pay insurance on that same car. So car alone is almost $1,000.
Oh my God.
So before they knew it, they would have entered into the house again, which is their home. And bank will give you generously. They will give you $1 million depending on what you qualify for. And once you enter that, that becomes a burden. And unfortunately, only God will help if you are able to increase your income. If not, you will continue to. That's why many people, after 20 years here, they can't show. They can't show for it what they have used their income for.
Wow.
And if you look at what you are going to pay in interest for 25 years of your mortgage, I can guarantee you, go and check it again. It cannot be less than 1/3.
Wow.
It can't be less than 1/3 of the mortgage itself. It can't be less than 1/3. Go and check it. Anybody that has a mortgage that you put down 5%, go and check it. It can never be less than 1/3. So that means you have paid almost like 1/3 of your mortgage as interest alone. So I always advise people, just try as much as possible to manage yourself, manage what you have, let your expenses be under what you earn from time to time, and don't do more than yourself. At the right time, you will begin to do those things that you wish, for your life. Yeah.
That's very, very, very deep, right? Don't do more than what you cannot do. Don't impress people because you just want to live like, just want to let everybody know that I'm living big, right?
No.
So the solution here is to focus, should be balancing debt, elimination of with wealth building strategies, not choosing over other. Like, you have to balance it too. That's what Tolu is talking about here. He is not saying that debt is not good. Don't forget about that. We have talked about bad debt. We have talked about good debt. But ability to balancing the two will help you a lot to create wealth. And that is what we're saying here. And that will lead me to another question, Tolu. What role does life insurance play in wealth building, especially among immigrants, business owners,
Huh.
medical professionals? What role does life insurance play in wealth building and legacy for medical professionals and other immigrants?
Yeah, honestly, when I first landed about 7 years ago, I really appreciate the fact that somebody introduced insurance to me. Then I also appreciate the fact that I started my career as a personal banker.
Hmm.
When I was, in personal banking space, we always advise people, please, please just do personal insurance.
Hmm.
You know why? Um, we honestly, number one thing for insurance is for protection. It protects you. I always tell them, um, if you come to me.
To cut you short, Tolu, can you please differentiate between, because you said have, I do advise, have personal insurance. So, what is the
Personal
personal life
life
insurance?
insurance.
Can you please differentiate between personal life insurance and probably group life insurance? Can you please,
Oh, okay.
so that our people will know, like, that, because a lot of people, like, once you ask them, do you have insurance? I have group insurance, right? So they're actually thinking that having a group insurance is enough, right? So
Mm.
what is your take on that?
For me, I have both. Okay, I have group life insurance, two group life insurance, and I think I have two group life. Yeah, I will call it. Both of them are actually group, but they are personal. Okay, so personal insurance, whether it is group or whether you do it by yourself as individual, they are actually life insurance. So when we are not talking of group insurance, for example, if you belong to a body, because I'm a CPA, all right, and there is actually with Manulife a group life insurance for CPA, members. So I decided to key into it. Why? Because it's actually cheaper for me. Okay, I keyed into it. Then also my place of work, there's also a group life insurance. I also keyed into that one. Okay, but the disadvantage with workplace life insurance is the day you leave, that's the day that group life insurance stops.
Wow. The day
So
you,
the day you leave, that it stops. So that it's not the best. So before I actually was able to get that of CPA Manulife. Why should I be mentioning him? I shouldn't be mentioning that. Before I got the group life from that particular insurance company, I I had a personal insurance, which I had with another firm. Okay. Why? Because when that one stops, this particular one continues, right? So we advise whenever you have your asset base, or let me say your net worth is still is still nothing to write home about, please get a life insurance. The reason why that is very important, if anything happens, that insurance, payback or funds that will be paid can help your family to continue with their lives. You already have a mortgage. For example, if you have a mortgage of $500,000, you should have minimum insurance of nothing less than $900,000. Why? So that if anything happens, $500,000, if they pay you $900,000 today, $500,000, you first of all, the family will first of all use it to pay down the mortgage itself. Why they have remaining $400,000? Because one income has been lost already. Okay, so that they can use that one to take care of themselves, to continue to run. Kids will go to school, they need to run their lives. So it is for protection. That's first thing. The second thing, I think we have some life insurances that actually comb protection and investment. I love those ones very well.
yeah.
I
Yeah.
love those ones very well. Why? Because on the other side of things, which is the personal life, you just be paying premium, paying premium. You're not earning anything, no return on investment. But when you have the combination, which is the personal life, which is the investment plus the life itself, then you begin to build, you can build wealth
Hmm.
through that, because at some point you're still going to be getting some, have access to your investment, and you'll be getting some, returns at some point. So that's why it's very, very good for protection. And it's also a good way of building wealth. We can't go into more details. Why? Because we've seen instances whereby some people did personally, that was what, uplifted that family
Hmm.
and build a generational wealth for them.
Amazing.
Because one person passed on, and the person that passed on has already done like $1 million investment. $1 million investment or life insurance somewhere.
Hmm.
You can imagine $1 million for a family.
That's a
They
lot.
they don't even have to touch it.
That's a lot. That's a lot.
That's a lot for them. So
Oh,
you can
thank you
imagine.
so much, Tolu. For those of us who are actually looking, mixing personal insurance with group insurance, Tolu has been able to, expansion on that today. If you have a group insurance, the moment you leave that job, you don't have the insurance again. Why? Because the reason why you have it is because you are working with them. Think about it. So, you know, have your personal insurance, have the group insurance is very, very good. You never can say, right? You never can say anything can happen. You can leave the job. You can change job at any time. Like you can decide to go and start your own business, meaning that you don't have insurance again. Again, if you don't have it when you are young, the more you age, the more it become expenses. Insurance
Yeah,
is a function of age, is a function of health, right? Some people
yeah.
really want to have it. They can't have it because they are not qualified. So insurance is not an investment. You have to qualify for that. Thank you so much.
Mm.
So the next question is this. I know you're going to love this question because it's one of the things you do. Why should immigrant business owner medical professionals care about tax planning, even though they are earning so much, right? Because why? I know many people feel that because I'm earning so much, I don't care about tax planning. I don't care whatever the CRA take from my money or whatever I'm paying as taxes. Why did I have to care about tax planning, Tolu?
Well, let me just say this. Hopefully, government will take it like lightly. There's
Well,
no point paying. Yeah, we have to. Let me say, there's tax evasion. That one is a criminal offense.
mhm.
Okay. Then the other one, which is managing your taxes. Okay, that one is not criminal. So in the ambience of the tax law, in every law there will always be loopholes, so to speak. Not loopholes, so to speak, but there will be always provision for you to actually, stay on the line of the law, while you are also able to manage, things for your own advantage. Like, for example, we have RSP, right? That's perfect. So for RSP, for example, the law has made a provision for you to say this particular amount you can contribute to RSP every year. And the bulk of that amount, the same amount, will be used to reduce your taxable income at the end of the year. So instead of you paying, taxes on that particular amount that you have contributed to your RSP, then it will be given back to you as refund because they've deducted it, the taxes already. So those kind of, you can imagine a medical professional making 500,000 a year. Just try to imagine how much the RSP can be every year.
That's
So
great.
if I do a mental sum, probably the RSP of that person shouldn't be less than that's like 20%. Okay. And that's like $100,000. So you can imagine A medical doctor earning 500,000. That's very high. If you are going to be taxed, assuming you are just earning as employment income, you will pay nothing less than close to 50%.
Absolutely. You're right.
So now imagine you put that 100,000 into RSP. So that means marginally you probably reduce your tax to about 30% there.
Mm-hmm.
So the question I want to pose to our viewer is, if I give you back 10% or 15% of your tax, will you be happy at the end of the day?
Absolutely. I will.
Okay, so that's why there's no point. Whatever means within the provision to reduce your taxes, go for it.
Amazing.
It doesn't make sense. It's, yeah, I know we need good roads, we need good policing, we need, so many basic infrastructures here in Canada for sure. So if that's the intention, why you say, okay, there's no point. Let me just continue to let them deduct whatever they want to deduct. Okay, that's fine. No problem. We continue to enjoy the benefit, all of us, together. But it doesn't really make sense. So you can imagine you having a refund of almost like 50K in a year, a refund, tax refund of almost like $50,000 in a year. And
That's
I imagine you are putting that 50,000 into your retirement savings every year, 50K.
that's a lot.
Just extrapolate it for the next 20 years of that. Imagine how much that would be. That's
Amazing.
$1 million on its own, right?
Mm-hmm.
Yeah, that's $1 million. And that's the absolute amount. I've not even considered the return on investment that you are going to be reinvesting
Mm-hmm.
into that same money. So probably you're looking at 1.5 million in like 20 years or 25 years. Okay. So it doesn't make any sense for you to, when you have a provision in place. So take advantage of it. This land is full of so many provisions when it comes to tax law that you can explore.
Yeah.
So many, so many. So take advantage of it and get as much as you can get out of it.
Thanks so much. Right. Wow. Take advantage of the tax law to, save on taxes. TFSA is there, RSP is there, corporate life insurance is there. There's so
Yeah.
many strategies. If you want to learn more, you can contact Tolu Lemo. You can actually, you can follow us on our social media handles on IG, on LinkedIn, on Facebook, on YouTube. We have YouTube channels. You can go there and follow us on to learn more about how you can actually save on taxes. So, our time is fast spent, but this will be the last question. Then I'm just going to round up after this question. So, Tolu, what does legacy planning mean to immigrants, business owners, high income earners, medical professionals? What does legacy planning mean?
Hmm. Okay, so for this one, when we want to talk about legacy planning, it has to do with the fact that, from the financial point of view, it has to do with the fact that you have something to pass on.
Amazing.
Okay. Uh, Whether it is negative, whether it is positive. Negative in the sense that some people pass on debt.
Wow.
Yeah.
For real?
Yeah.
Wow. How does one pass debt, Tolu? How does one pass debt on?
It's so simple. For example, you have so many, like we mentioned, you don't have enough assets in place. All of a sudden you have an estate. Definitely when somebody passes on, they have an estate. And at the end of the day, you have so much debt. On the other side, you don't have enough assets to pay it off. So that's it.
Amazing.
So for example, you already have that, and let's assume that the person thankfully has life insurance in place. And I mean the how will I call it? The children, people that are actually left behind, they are looking forward to something like that, and all of a sudden they discover that there's so much debt in place that's going to erode the entire life insurance, right? So that's painful. So when we are talking about legacy planning, it starts with you being intentional about making wealth or generating wealth that you want to pass on to your offsprings. That you want to pass on to your offsprings. And the way it works is you need to start early. Like the first thing is to have a will in place, which is definitely you can talk to a lawyer about that. So when life eventually happens, what I've seen is people come up with with a structure or organization or a structure that is more like a trust.
Mm,
Okay. So all your assets, they are being bundled into the trust. Okay.
mm,
And the way the money will be spent, because when you have a trust, assets are actually built up in that trust, right? Those assets, they are not liquidated, right? They still continue to generate income. So the question now is those income that are being generated, those assets that are being most likely, if you want them to realize it, what do you want them to use the money for? I've seen instances when I used to work with one of the big fours where this family, it's good to have money. This person has wealth that generations upon generations,
mm.
they still get income from that legacy, from that trust company.
Wow.
They
That's
pay, yeah, you can write it in your will that whatever that is being earned should be shared among maybe grandchildren or level two, maybe level one, level four, generation one, generation two grandchildren. You can imagine that.
wow.
And those money are not going to be spent. Those money are not going to be, those money are still going to be run. I mean, those assets are still going to continue to run. That's why we have wealth organizations that are actually into that. And Mr. Fashola, that's what you do anyway.
Absolutely.
So they come up with a solution that continues to run as a mechanism, as a system, and that wealth, that investment continues to generate income. So legacy now, what legacy is all about is what do you want after you have gone? You want your money to be doing. That's why you will see a particular library being named after a particular family.
Mm,
Why? Because the trust company inside the will, they probably said, okay, at some point, give $1 million to City of Calgary Library or Calgary Library to build. That's the legacy. That's what they want to leave behind. Or
mm,
you probably see somebody to say, okay, help me to build this community where we started from. Okay. Or you can say some people will just come up with at every point in time to say, we so much, maybe their mother died of cancer or something, every year be sending $1 million to the cancer foundation.
mm.
That's legacy. So that it cannot happen unless you have built wealth.
Amazing. Thank you so much,
So
Tolu, for today's program. We want to appreciate everyone that's joining us today's program. We want to bring the program to an end. Just in 1 minute, Tolu, what message do you have for immigrant? In just 1, 2, 3 seconds, what message do you have for immigrant, business owner, medical professionals about wealth building?
number one, I will just say three things. Number one, when you make money, try as much as possible to save and invest.
Amazing.
Two, the kind of investment you are looking at, diversify your investment. Your full time, you might continue to work on that, but look for other people to collaborate with to build wealth because that's the only way to do it. The
Nice.
last thing I'm going to say is check your lifestyle.
Amazing.
Keep your lifestyle in check.
Thank you so much.
Thank
On
you, sir.
behalf of Wealth Building Conference, we want to appreciate everyone that's joining us today. We want to thank you so much, Tolu. It's been a
Yeah.
power pack, podcast today. Sorry, we have a little bit of technical issue when we started. We want to assure you that next time we're going to work on that going forward. So I want to bring this meeting to an end. Next week is another time again. We're going to have another program. So, on behalf of Wealth Building Conference team, I want to say thank you so much. See you next week. Bye for now.
Bye.
Bye.